Good afternoon, everyone, and thanks for being with us today. A warm welcome to the third edition of the LuxFLAG Sustainable Investment Week. But before we start, we at LuxFLAG, we would like to take a moment to thank you all for your support during this last difficult month since the very tragic passing of LuxFLAG General Manager Sachin Van Callis. Sachin was a great human being and a tireless supporter of sustainable finance. He exemplified LuxFLAG with his passion, ambition, and drive to move to a sustainable future. Thank you. In my role as Acting General Manager of LuxFLAG right now, I'm very pleased to see that after 2 editions, the LuxFLAG Sustainable Investment Week has already gained recognition. And it is thanks to LuxFLAG's associate members who are showcasing this week where they are in the sustainable finance journey. Given the finance industry is on different stages of that journey, this week is about sharing best practices so we all advance towards the goal of making all finance sustainable at one point in time. For this third edition of the LSIW, we thank you for such positive response with over 3,500 registrations. This is amazing, and I'd like to thank to our host partners and media partners as well. The 25 sessions over the week cover the latest trends and most pressing issues in sustainable finance, and we hope you find them useful and find inspiration in the progress being made to harness finance to help find solutions to our current environmental as well as social challenges. A few housekeeping rules. The slides and the recording of these sessions will be made available to you in a week or so. For Q&A, please use the Q&A function at the bottom right of your screen. In case we don't get to have the time to go through all questions at the end, the questions will be forwarded to the host for subsequent responses directly to you. But now to the session. It's with great pleasure to introduce this 4th session today because it's hosted by VP Bank. VP Bank Group is an internationally active private bank and one of Liechtenstein's largest banks. For more than 60 years already, VP Bank develops bespoke financial solutions for both intermediaries and private clients with a focus on the future and also with sustainability in mind, seeing change as a source of opportunities. So the topic of the session today is very clear and stands for itself. Investing for change, sustainability is key. I'm really excited to hear how this topic is approached by VP Bank, and for that, I'm pleased to introduce Dr. Felix Brill, the Chief Investment Officer of VP Bank AG. A welcome note will be given actually by Klaus Jürgensen, the CEO of VP Bank Luxembourg. With that being said, and without any further ado, Klaus, the floor is yours. Thank you.
Yeah, thank you very much, Michael. Also, first from our side, we are proud to be a member of LuxFLAG, and we are very happy to have supported it. I think that the presentation from Felix Brill will explain you why we also have so much focus on sustainability. So also from my side, a warm welcome to each and everyone to this session. And as Michael said, we have called it Investing for Change. And my name is Klaus Jørgensen, as I said, CEO of VP Bank in Luxembourg. And I'm also proud, as I said, to have Dr. Felix Brill to explain our thoughts about sustainability. And to be clear, seen from our side, it is not only about investments. And to put this into the right context, I will just give you a few words about VP Bank in this matter, because we think much broader. The bank is listed on the stock exchange in Switzerland, but 3 bigger owners own more than 40% of the shares and more than 60% of the votes. These 3 owners are all foundations or Stiftungen in Liechtenstein, and they hold in their statutes that they have to have the shares in VP Bank, and they give the return for charity. So therefore, this is an owner and a company process we have been in for some years. And in the company, Dr. Felix Brill, he is the driver for how we develop this when it comes to sustainability. For 2020, we published our first Sustainable Development Goals report, where we on 30 pages in public inform about VP Bank and the 17 Sustainable Development Goals from United Union. And by this, I now give the word and the floor to Dr. Felix Brill. Thank you.
Thank you, Klaus, and thank you, Michael. It's also a pleasure for me, and welcome from my side as well. It's actually be quite an honor to drive that initiative and the topic over the last couple of years now, because I think it's very important. And as Klaus just mentioned, for us, sustainability is not just something that's related to the offering. For us, it's really key to the also to corporate strategy, because one of our key beliefs is that you have to be credible. And for credibility, it's not just sufficient, like to have nice and forward-looking products, but you as a company, you also play a very important role. And therefore, we called basically that initiative not just investing in change, but investing for change, because we as a company believe have an important role to play and can contribute to that change that is happening and shape the future together with our clients, and to find solutions towards, like solving basically or addressing the big challenges of our time. And one of the biggest challenge, I think, and everyone probably agrees, is climate change. So, and as Michael already also said in his introduction there, and the interest and also the acceptance is really gaining very much, and we've seen that development. And you can look at various statistics. I just brought one chart here with me to illustrate that, like it's the big thing, not only in our society, but also now finally also in finance. Here you see a chart showing the assets in sustainable funds, how it developed over the last couple of years. And you see that's a strong increase, very much driven actually by Europe, but also now the United States and the rest of the world are catching up. And I would say one big driver for Europe was very much related to the EU, to the European Union and its EU Action Plan for Sustainable Finance. I think that was really a game changer, because now all financial institutions not only like had to think about, do I want to do something here? Is it my responsibility or not? But to some extent, we all had to look at it, and we as a bank then also decided that for us, it's not just like we don't want to do the minimum, but rather use that as an opportunity to really embark or engage in a journey together with our clients, and then to drive things forward. But it was not only regulation, especially in Europe, that it's driving that interest and the demand for sustainable investing. You see that you see it also from a broader perspective. Fridays for Future, Greta Thunberg, she has changed something really, and it's not just some parts of the population now that are like addressing the issue. It is now in the midst of our society. And if you look, for instance, at the recent election in Germany, it was one of the dominating topics. And now, actually, interestingly enough, that one of the important or key drivers in the parts of the parties, the Green Party, kind of now struggles to some extent, was struggled to really demonstrate it's still the most green and most sustainable and party here on the agenda, because now all the parties tried to address that seriously. So now basically it's really something that is in the midst of the society. So there's a lot of interest, but also the awareness that there are huge challenges. And over the last 2 years, I think a lot has changed also now, how on the investment side, people and potentially clients also look at it. And things have changed, I would say. It used to be quite often when I was addressed the question like what about sustainable investing or ESG investing, then kind of like I do want to get performance and not just sustainability. I think this perception has changed. There's now the awareness that if you do it correctly, if you do it right, taking into account ESG, or more broadly speaking, sustainability criteria, it can also be a very good risk indicator, additional risk management layer, basically, to the portfolio. And it's no longer the perception that it's either sustainability or performance. You can now really demonstrate also empirically that there can be quite a positive link, or at least you could state that there's not necessarily a loss for performance, because on the one hand it is actually an additional risk indicator, and on the other hand it creates a lot of opportunities also to invest in, because if you look at climate change, I think it's quite obvious that we won't find solutions by just like saying, oh, like prohibiting things you no longer are allowed to do, but there is a lot of demand and a need for solutions. It's calling for innovation, and if you look at the past decades and centuries, such a change can really drive also then innovation and can create a lot of companies that drive that innovation that also then benefit from a financial point of view. And now there's a lot of interest also, not just on on avoiding the negative part of it, but also really trying to look at how can we drive change and participate at the same time along these companies. So as you can see, there are a lot of different drivers for that development, and in my view, we are still at the beginning. So there's way more to come. And as I said previous in the introduction, when we decided as a bank, and this is a bit of the focus, I want to take you on that journey, what we did over the last 2 years now, and that because probably a lot of you also face similar challenges, has probably addressed that issue already. And for us, it was very important in the beginning to really find the right scope. And for us, when we launched it really on a strategic level by initiating that initiative Investing for Change, we said, well, we have to do it in a credible way. And so therefore, what we did in the beginning, because of course we had already a lot of ideas, and also the years before we did a lot of things related, for instance, to facility management, reducing energy costs, and so on and so forth. But it was not kind of an integral part or so much aligned with the overall strategy. It was an important topic, but it was kind of an additional topic. Now we thought it should be part of the overall strategy of the company, because that also creates a credibility, and it's very important. And in order to get a better understanding what we as a bank in a credible way can do and can contribute, we did a very extensive stakeholder engagement process. So we did a lot of workshop with our most important stakeholders, starting with on surveys, starting with our clients, but also with all the employees, with our anchor investors, as Klaus Jürgensen mentioned, the 3 big foundations, and also to have that outside-in view with external experts that we also ask then what they think, what should our role be. And one of the most important takeaways for me personally was one quote from one of the participants. And he said, if you want to do it properly, if you want to be successful, you have to bake it into the culture. It shouldn't be just the icing on the cake. It has to be baked in. And this also relates to the credibility topic. And we thought then and decided basically now we really have to do that in a broad-based, supported way, aligned it with the overall new strategy that the company developed for the next 5 years, the strategy 2026. And of course, at the same time, making sure that we will be compliant with all the regulatory requirements. But we want to do more than just the necessary, that's for sure. We want to do something that is credible, that makes sense, and which allows our clients also then to contribute to solving and addressing the sustainability issues as for instance, also the climate change. And now that's all nice. You might say, well, you have now aligned it with the strategy, but of course you have to do some implementation. So we came up, developed a sustainability plan and sustainability strategy. We set ambitious targets for the next 5 years in order really to implement that change. And the interesting thing here was it really, like a lot of you probably have had to do in one form or another with a change project in your professional career, maybe at your current company or previously. And sometimes, or quite often actually, implementing or initiating change can be quite cumbersome because there are a lot of colleagues first a bit maybe hesitant, resistant even, saying, why do we have to change at all? Because it makes things a bit more uncertain. It makes common and things you are used to, and now you have to change these things. And this time around, it was really, first of all, interesting, but then on top of it, for me personally, for my colleagues, also very motivating, because a lot of colleagues in the bank, and this was not just the case in Liechtenstein, but it was in Zurich, it was in Luxembourg, across many different levels in the company, different also like teams and areas of the company. A lot of colleagues approached me and said, like, how can I help? How can I contribute to that change program? And this is, I think, nothing usual. This is quite special. And for me personally, that was really motivating to really see that there is a lot of interest. Now, but then the first challenge kind of we faced, and probably most of you still also face, is the question a bit, like, what is actually sustainability? What is the common understanding of sustainability? Is there one accepted definition? And the short answer is no, it isn't. I mean, in the beginning, a lot of focus, especially in the financial industry, was put on like the ESG ratings, and especially also then, and I'll come to that in a second, on kind of some negative screening. You want to avoid the bad stuff, basically. But even if, and it's kind of addressing it in a manageable way, because then you can put some number on it and you can put that into tables and you can exclude stuff, companies or bonds, and then you like can compare even. But even there, things are not as easy and obvious as you might expect. There are now many different ESG ratings available from different data providers for different methodologies. And it's actually quite interesting that so far, at least, there has not been tendency towards a common rating understanding, as it used to be happened basically with the credit ratings. You see here the result of a study that was published in 2019, where the authors compared different rating agencies, like with regard to how similar are they for the different companies. And you see here the correlation. And if you look at the average rating for all the companies in scope in the sample, it's just a correlation of 65%. If we look at the max ratings, it's a bit higher, but if you look at the lower ratings, it's even worse at just 0.42. If you compare that then to the correlation between the different rating agencies when it comes to credit ratings, it's really quite a difference. The credit ratings have a correlation of almost 99%. So basically, if you look at S&P, you can also have the same answer basically from Fitch. I don't say it's positive or it's necessarily a good thing, because you might remember the financial crisis. So if everyone thinks the same and everyone thinks like that credit rating is very good, that's probably not the best risk indicator then available, because maybe it misses some parts of the picture. Now, this can actually be quite an opportunity now in terms of the ESG ratings. There is not yet this common understanding, and this also allows for a bit more creativity and basically the competition among these rating agencies to provide and come up with the most preferred solution. Another challenge here, so what we faced. So first of all, of course, now, I mean, there hasn't been that common understanding, that not even be the common or the best rating agency probably agreed on everyone when it comes to ESG rating. But even if you assume that there is now that perfect ESG rating, there was still the challenge that like these ESG ratings were only available for companies basically. So you could apply it for your stocks and your bonds. But what about all these alternative investments and assets that everyone is looking for in the low interest rate environment? And interestingly, basically in the beginning, a couple of years ago, the first investment solutions quite often either were just focused on like that equity funds or bond funds, or in a portfolio context, then quite often you saw solutions that just had kind of a balanced portfolio just consisting of bonds and stocks, and basically going back to the future or to the past, basically to the 80s in terms of what finance suggested. It's an optimal portfolio. So of course, I mean, I think that makes it obvious that in order to address it in a more modern broad-based way, we had to come up with our own interpretation. So to some extent, it was actually also quite interesting that there hadn't been so far that common understanding, because that allowed us also to do some interpretation. I think this is just something like that works for us and for our clients at the moment. Over time, we will have to adapt as well. But we came to the conclusion that we don't want to wait for the next 5 years until that solution is available, everyone agrees to, because we rather would say, well, we start now, we do a couple of steps in order to wait 5 years, do nothing, and then do a big jump, and then maybe being surprised that it doesn't work. And on top of it, if you already start now, you can also have an impact today, even if it might be smaller than in 5 years' time. So our conviction was, and this touches upon what I said in the beginning, there's no trade-off between, in general, between sustainable investing and performance. You can do it in a good or bad way, but it is not directly linked to just sustainable investing. So there's no trade-off. We think even you can add to that in one form or another, sustainable investing, taking these the criteria into account, can be advantageous for all investors. And for us, sustainability is more than just a plain ESG rating. So with these convictions, we focused then on how to implement that. So we said we want to work, do some steps already today, which basically calls for a pragmatic approach. We integrate it completely in all our offering, not just some niche products. It should be at the center, at the core of our offering. It should be included everywhere in order also to be credible and to basically mirror our convictions. And we don't want to just focus on the negative part of it, the exclusion of things, because we think it's much more interesting to look also at the opportunities that sustainability creates, that this change creates. And by the way, I don't like it. Actually, I don't know how about you. If I'm in a meeting with a client, that I have to tell this client what she or he no longer is all the time, no longer is allowed to do. I think it's much more engaging and interesting to talk about potential opportunities instead of just the bad things that you're no longer allowed to do. And what was also very important for us in terms of implementation, we want to focus on the portfolio level, because we don't just want to focus on the single investments, but rather really put it into context for the whole portfolio. Now, there are many different interpretations still there. There is a bit of a tendency now to the typical classifications, all the buzzwords. We looked at it and picked out these 4 basically categories or different approaches. So we said, well, of course, even though that's not a thing we want to focus too much on in the engagement, it's part of the game, that we also, for instance, for risk management, to have a negative screening in place. So we applied that to all our investment process. On top, we do also positive screening. So we want to, so companies in our case, or in assets, investments, benefit if there's a positive tendency, for instance. Then, and this is also part of all our investment decisions in our investment processes. And then on top of it, we say we decided to add thematic investments. So this is offered. This is part of our offering, also in our sustainable, in our discretionary offering. And to some extent, and clients can choose and select thematic investments, where we then focus, of course, on the opportunities that is stemming from the change that we are witnessing at the moment. And then even further down on the scale, its impact solutions. There it's also, we said this is something we want to work on. We don't do everything on our own. We try to identify interesting solutions, work together with partners, and try to integrate that into our offering. Now, what did we do? How far did we come along on our way? This is our roadmap we agreed on 2 years ago. We said in general we want to the integration in all our investment offering. We've been successful so far. In the beginning, we included all these criteria and the definitions and in our investment process. So starting on the research selection process up until further down up to basically then all our products and services we offer to our clients, both on the discretionary side and on the advisory side. So basically we overhauled all our products. We launched new products since the beginning of this year. Now here it's consequently integrated in all our discretionary and advisory offering. And now we working the focus this year and for the next years now then is on having impacts and thematic investment solutions on top of it. I come to that at the end of the presentation. Now, and our overarching goal here is not in terms then also again on the credibility side. If we use ratings for the companies and if we work together with our clients, of course, we then also want to be rated. And we have set the goal to become at least a AA rating by MSCI in terms of an ESG rating. So this is our target, our overarching target until 2026. But along that way, we have other objectives. For instance, we want to be, of course, in our operations, carbon neutral, but also we are working on how we can get with all our offering on the investment side to have a net positive contribution to climate change. So this is things we are working on. Now, I said, well, it's not the perfect solution there in terms of ESG ratings. It's not they are not available for all the asset classes, and they tend to focus a bit on the negative screening part. We said we want to do more. We want to have that holistic view in the portfolio. So we based on one of the we used MSCI data. This is our anchor. And we said, but then we developed our own sustainability score, where we started the ESG rating for an MSCI. But then we add 4 more dimensions to it. First, we look also in business practices, business activity, and as I mentioned, we want to also apply a positive screening. We look at the ESG momentum in the rating in order to also identify early on companies that move into the right direction. So it's not about just selecting those with the highest rating as of today. If a company is maybe not, like fulfills the minimum criteria, the negative screening, but shows basically a positive momentum, then it gets some bonus points in order to have a higher rating, because that this is an indication that the company takes it seriously and moves in the right direction. And just this year, we included in the second iteration now also the SDG and impact exposure to it also on a numeric basis, in order to have not too many dimensions and have to come up with a rating that is easy to understand and can be compared across assets and asset classes. Well, how does it work in the investment process? We start basically, if you say we start with that anchor of the ESG rating, we start with the negative screening. So some companies don't make it basically if they are excluded because of a bad ESG rating, or if they have some business practices or controversies that are not not acceptable. And here, you know, like probably and you all agree that if it comes to ESG and sustainability, it's a lot about values. And it's not our role. We decided to basically tell all our clients, these are the values you have to adhere to. But still, in terms also for credibility, we as a company, we need also to have our values reflected, and we have to draw some red lines, minimum criteria. So we start here, but clients can go, of course, even further in terms of even more being more restrictive in the negative screening. On top of that, then we do a typical financial analysis and added the positive screening, a qualitative analysis, so that we can then come up with an overall assessment, for instance, in the stock, if you recommend a stock or not. And we show this basically with that chart, so we can compare on a single asset basis also, but also for funds, the rating based on our sustainability score with the underlying benchmark. So can use that to start a discussion with the clients, but also, of course, to make it practical then for our portfolio management, and also to basically define the characteristics and the criteria for our own products, where we say, well, we want to have a certain threshold that our score has to surpass, basically. Now, in this, and because it comes down quite often a discussion to values and personal preferences, for us, we decided, and also now we have the basis with the VPSS, the sustainability score, but we have also then to think about how can we report on it. And for us, the conclusion was transparency is really key. So we worked on, and it's still a process that's going to continue, to redesign all our fact sheets and so on. Here you see how now today equity recommendation looks like, and we included our score and some details, so then that our client advisors can really talk to and discuss with the clients if this matches their preferences. And it's now the basis then also if you look what we have to do in the suitability checks down the road from the EU action plan, and the inclusion then in the MiFID criteria. We did also transparency, not just on the fact sheets. We also included it in all our portfolio statements and wealth statements in our core banking by the end of March. So even if a client did not ask us for, you know, like to show that and have already made up his or her mind what about they should do with sustainability, we decided we think it's worthwhile to edit the rating and the key statistics on the portfolio statements, so that this is also then a basis to start the discussions with the clients. And in order to do that, and that also our client advisors feel comfortable to do that, we did a lot of training with our client advisors, which gained so much basically interest and good feedback that we did that also this year then for all our intermediaries clients in Liechtenstein and Zurich, Liechtenstein and Switzerland, because if you're a family office or independent wealth manager, you might face the same topics and challenges, and we did a lot of sessions with them, and this is really interesting to have that engagement. Now, and with all that, we were able then also, and just to show you also in terms of opportunities, what that can then mean for you or for us as a company, we said, well, this allows us also to have some interesting new solutions that we can come up with, or products. So we said, well, there are clients, of course, that are really into the topic, really interested. And so we came up with the Sustainable Plus mandate. We launched it just a month ago, where we said, well, this is for investors or clients that want to really focus on climate change and social change. They want to contribute to that. They want to set their own sustainability priorities, and they want to have a really high quality in their portfolio for also then for risk management. And so in order to achieve that, we said, well, this has to have a higher score than our classic sustainability discretionary mandate. So this is one part of it. Then a second element is we included impact investments. It's still in a liquid portfolio. It's in portfolio management. It's not private markets. So there are certain limitations to it, but we included now for the first time green bonds, social bonds, and microfinance. And in order to have even more own priorities and also on the impact side in terms of equities, we defined or identified 5 thematic investments that, for instance, focus on climate action or on demographic change, and we make them investable, and the clients can then choose. We also decided that this is no longer kind of a special solution that just for clients that have that particular interest. It's part now of our standard offering. So clients can decide, I mean, in the end, it's about preferences. And so it's not that like our classic offering is kind of worse or better. It very much, in the end, it depends on the preferences about the values, and now clients can really choose on. And basically, this so far what we've seen was a lot of positive interest and feedback, and I think this is something now really to engage with clients on the journey without, and that's very important. And you've all heard and seen also the media coverage on the greenwashing of some offering out there. Of course, that is a challenge, and therefore we think it's very important, first of all, to be transparent, and second of all, to really manage expectations. You should oversell or overpromise anything. Like our sustainable offering, for instance, we can demonstrate what it can do, but we also have then to say what it isn't, what it can't do. And so I think this is very important. And just to conclude, in order on the journey and to show now that it's still not over, but I think it's very important to be on the journey, that as Klaus mentioned, we published our first extensive sustainability report, so you can have a look at it if you're interested in our journey in more detail. In terms of credibility, what's also very important, we signed this year the PRI and the PRB principles. We developed our score. We did all the training I mentioned. Now we came up with the plus offering in sustainability to have preference-based solutions. And finally, we are working on impact solutions and also philanthropy. With that, I think it's really interesting times. I hope I could show you what we did as a company. It has been a process, very interesting. Not everything worked in the beginning, of course, but what I can tell you, it was worthwhile. It was really motivating because it allowed us really to engage not only with our clients, but especially with my colleagues in the company. And this is something really worthwhile than waking up every morning and going to the office or the home office and work on some new ideas. With that, thank you very much already for joining in. And now I hand back the microphone basically to you, Michael, I guess.
Thank you, Felix. Thank you very much for this very enlightening presentation. And since we are a bit ahead of schedule, if you allow, Felix, I would basically have 1 or 2 questions that I would like to pose to you in order to see whether you could take them for our audience. And the first thing is basically, you've been talking a lot about, or used often, the word credibility. This is something that I understand is extremely core to VP rank. And then you also said that ESG and the entire sustainability theme needs to be baked into the company's culture. I like that expression. Could you maybe share with us, how did you basically ensure that? How did you manage to get everyone internally on board to accompany you on this journey?
Yes, that's a very, very important question. I think we did a lot of good and promising steps already, but probably also here the journey is not over yet. But just to give you some ideas, so we started off in the engagement process that we did a survey among all our colleagues, all the working staff. And it was also interesting, without a lot of reminders, I think we only sent out one reminder, 70% of the colleagues replied to that survey, which is actually a strong statement also that there is interest in the topic. Then, as I mentioned, we did put a lot of effort into training sessions. So for all our client advisors, it's now actually mandatory to do that e-training. So we will do that, repeat that. We spoke on town halls about it. We do also small events in the company. We did WebEx sessions, stuff like that. And we ask our colleagues also to come up with ideas. So we have a sustainability board, which I'm honored to be the chair. So for instance, like how we can reduce paper waste and paper consumption and other energy consumption, stuff like that. So people can colleagues can come up with ideas.
Thank you, Felix. Another word that I also noted that you have been using a few times was actually the word journey, or what others usually refer to also as we are all in the process of transition. And you basically said that we rather want to take now a couple of steps to have an impact already today and not to wait for 5 years. Obviously, it's extremely important that you communicate about that. And you mentioned it yourself. You're very well aware of what you can do, what you can deliver already today, but you also
Yeah, I mean that it's a bit the challenge, and like there's also a lot of, just recently at a discussion actually with a journalist, and he came up and said, well, and it was a very good discussion and very good questions. But one I was a bit struggling in the sense that, really, and so he asked, so everyone knows that, like one company is producing chocolate in Switzerland, without going into detail. So he said, well, everyone knows that they use child labor on some of their, for cacao, basically. And said, well, really, I mean, we have to make sure also that it's not just about, like everyone knows something. And I think we have also to have some common understanding and basis how we come up then to conclusions. And of course, we as a company, we have globally 1,000 employees. It's clear that we cannot do all the primary research. We also have to rely on other partners and people down and offerings down the value chain. So to some extent, we have also to rely on ESG ratings from other companies, or we apply then international standards, for instance, from the International Labour Agency. And of course, there's a risk that you miss something, but here I think it's very important that you can also, transparency here is key, that you can explain and demonstrate what are your criteria, how did you come to that conclusion, and again, what does it offer and what doesn't it offer? So not overselling and over promising that this is now whatever doing to the portfolio or to climate change. So I think here also transparency and the ability to explain and what you did and how you come to a decision is very important. I think now, Michael, now you're back.
Now I'm back. Sorry, Felix. Technical issues, these glitches, unfortunately, these days, they are quite common. So fortunately, I couldn't hear the response to your question, to my question earlier. But also what I wanted to say, basically, because we're getting closer to the next session, is that I wanted to thank you big time for this. I also basically took note of another statement you made, because this is a quote that resonated with me, and I hope it will also resonate with some others in the audience, because you said at the beginning, sustainability is not only in the products, it's part of the corporate culture in order to be credible. I guess this is something, if we all adhere to that, that will basically also help us to move sustainable finance forward on the map of our investment lives. So thank you very much for that. Also thanks to you, Klaus, for the introductory note at the beginning, and apologies again for the technical glitch with having been kicked out, but that's what we basically face. One day we will be all back to physical events again, and then basically we can only complain about the microphone in case it doesn't work. But with that, thank you again, and I actually would like to introduce also the next session that will start by the hour. At 3 o'clock, it will be hosted by Linklaters and focusing on Islamic finance and impact investing. So thanks again to you, gentlemen, and take good care. All the best. Bye-bye.
Bye.
Michael. Thanks for the audience. Thank you. Bye.